You wake up, your phone is glowing, there's a notification from your bank, your paycheck just hit, and in the next 6 hours, you're going to make decisions about money that you would never have made yesterday, even though nothing about you has changed. Not your discipline, not your goals, not your bills. So why does payday turn you into a different person? Most people think it's about willpower, that if you were just more disciplined, you wouldn't blow through a third of your paycheck in the first week, you'd save, you'd budget, you'd be one of those people. But discipline isn't the problem. The problem is that the money sitting in your account at 9 a.m. on payday is not the same kind of money as the money sitting in your account 3 weeks later. To your brain, it's an entirely different substance. It feels different, it tastes different, and you spend it differently, automatically, before you've even noticed you're doing it. There's a name for what's happening, and once you see it, you can't unsee it. The economist who figured it out won the Nobel Prize for it. So let's break down what's actually going on. There's a concept in behavioral economics called mental accounting. The idea, made famous by Richard Thaler, is that your brain doesn't treat money as one big pool. It treats it as a bunch of separate envelopes. Here's the trick. When your paycheck hits, your brain doesn't put the entire amount into the serious envelopes. It instinctively skims off a chunk and drops it into the fun envelope, even though you didn't decide to. Even if your bank account is one single account with one single balance, your brain is running a separate ledger underneath, and the fun envelope on payday is full. So when you see a $40 t-shirt later that morning, it doesn't feel like spending $40. It feels like spending out of the fun envelope, which feels like spending nothing. But mental accounting only explains how you justify it. It doesn't explain why it feels so good. That's where the second thing happens. And it's happening inside your brainstem, not your bank account. Getting paid triggers a dopamine response. Dopamine is the brain chemical we associate with reward, but that's not quite right. Dopamine is actually about anticipation. It surges when something good is about to happen, then drops when the good thing actually arrives. The problem with payday is that the dopamine peak from seeing the deposit is over in about 90 seconds. The high vanishes. You feel flat. And your brain, having just felt that beautiful spike, wants it again. So you go looking for another small reward, a coffee, a new pair of headphones, a takeout lunch. Each tiny purchase fires the reward circuit one more time, just enough to chase the high you got at 9 a.m. By 6 p.m., you've spent $200 trying to recreate a feeling that was free. Here's where it gets weird. Researchers have studied people who get paid weekly versus monthly, with the same total income. The monthly people consistently spend a higher percentage of their paycheck in the first few days. Same money, same person in many cases, just spread differently. When all your income arrives in one big drop, your brain treats it like a windfall. And humans evolved to spend windfalls fast, because in a hunter-gatherer environment, hoarding meat got you nothing but rotten meat. Your brain is still running that ancient software. The longer the gap between paychecks, the more windfall-shaped each one feels, which means the worst pay frequency for your wallet is the most common pay frequency in the modern world, once a month. There's one more thing happening, and it's the sneakiest of the three. It's called anchoring. Your brain decides whether something is expensive by comparing it to whatever number it saw most recently. On payday, the number it saw most recently is your bank balance at its monthly peak. So an $80 dinner doesn't feel like $80. It feels like 4% of what you have, a small fraction, almost a rounding error. 3 weeks later, when your balance is a fraction of what it was, that same $80 dinner suddenly feels enormous, because now it's 40% of what's left. Same dinner, same dollar amount, completely different felt cost. This is why the most common spending mistake isn't buying things you can't afford. It's buying things that feel cheap on the 1st and would have felt expensive on the 25th. So here's the part nobody tells you. The reason you spend more when you get paid isn't a flaw. It's 3 pieces of perfectly normal human brain machinery: mental accounting, dopamine chasing, and anchoring working together. Discipline can't fight all 3 at once. It's like trying to hold your breath while 3 different people slap you. What actually works isn't willpower. It's removing the moment of decision. People who don't blow their paycheck aren't disciplined. They've automated the money out of their reach before their brain has a chance to play any of these tricks. They move it to savings within minutes of it landing. They route bills automatically. By the time their conscious mind gets involved, the fun envelope is already a smaller, fixed number. There's no willpower battle because there's no battlefield. But there's a stranger version of all of this. Because the brain doesn't only do this when money arrives. It does it in reverse when money runs out. Something happens on the 25th of the month that's even weirder than what happens on the 1st. When your bank account runs low, your brain doesn't just feel anxious, it physically changes how it works. There's a Harvard economist named Sendhil Mullainathan who ran a study you should know about. He gave the same short IQ test to a group of sugarcane farmers in India twice. Once after harvest when they had money, once before harvest when they didn't. Same farmers, same test, same brain. The only thing that changed was the balance in their pocket. The poor month version of each farmer scored about 13 IQ points lower than the rich month version of themselves. 13 points. That's roughly the cognitive cost of pulling an all-nighter. Mullainathan called it the bandwidth tax. Scarcity doesn't just make you sad. It runs an expensive background process in your brain called "I'm about to run out of money," and it eats the same mental capacity you'd otherwise use for everything else. This is why on the 25th of the month you forget appointments, you miss texts, you skip the gym, you make tiny mistakes you wouldn't normally make. You're not lazy. Your brain is running a hidden subscription you can't cancel. It also flips a switch researchers call tunneling. Your attention narrows onto the immediate. Tomorrow's problem becomes invisible. Future you stops feeling real. Which is why the worst financial decisions of every month happen on the 25th, the payday loan you wouldn't have touched on the 1st, the impulse buy that makes no sense, the food order when you swore you'd cook. It's not the same person making those choices. It's a brain in tunnel mode. And here's what should make you sit up. This isn't only a poverty thing, it's a scarcity thing. The same effect shows up in middle-class people during a tight month, in students before their loans hit, in freelancers between gigs. The bandwidth tax doesn't care about your tax bracket. It cares about the gap between what you owe and what you have. So when you put it all together, the envelopes on the 1st, the dopamine chasing through the 5th, the anchoring through the 15th, and the bandwidth tax on the 25th, you start to see why money management is almost impossible to learn from inside the cycle. Every week, your brain is running a different program. None of them are the rational planner you imagine yourself to be. But here's the real question. If your brain works this way, and almost everyone's brain works this way, and almost no one was ever taught to recognize the pattern, who designed the modern economy around it? Because once you start looking, you'll notice that almost every financial product you've ever encountered, credit cards, subscriptions, buy now, pay later buttons, is built to exploit at least one of these 4 phases of your monthly brain. And that's a video for another day. Stick around.